Sales in Vancouver for the month of July have not been this low since the 1990s. Inflation and real estate prices have spiked, and now the Bank of Canada is trying to halt the inflation they created, which, yes, you guessed it, has had an effect on the real estate prices, and we've been seeing it decline over the past few months. In this video, I want to look at the peak of the market and compare it to today so we know just how much sales and sale prices have been affected by the increase in interest rates. But before I dive in and show you guys all this wonderful data, I am going to ask you to hit the like button and the subscribe button to help me get my content out to more people like you who might be wondering what's going on in the Fraser Valley real estate market. Also, a reminder, if you guys ever want to chat to me about real estate, I have a Calendly link below where you can go on and book a 30-minute phone call or a Zoom consultation with me, and we can talk about all questions real estate. All right, let's dive in and take a look at what's going on in the market. So we hear a lot of stuff floating around right now in the news headlines. So I really wanted to zone in and show you guys the actual facts, and I thought it would be helpful if I showed you what's going on in the Fraser Valley, Greater Vancouver, Chilliwack, and Vancouver core area. I'll share my screen with you here. So again, what I've done is I've picked Fraser Valley, Vancouver, Real Estate Board of Greater Vancouver, Chilliwack Real Estate Board as well. I've just clicked on sales here. This was the peak of the market in 2022 of March. So we had 2,476 sales in the Fraser Valley Real Estate Board, which is represented in blue. Fast forward to today, we see 946 sales. This has gone down 61% since the peak in March, but I also want you guys to take into account that the summer months are generally slower than the spring months as well. You know, when you see these headlines like down 60%, which is true, but we also have to adjust for seasonality as well. And then I wanted to show you guys the Hpi Price Index, which is the benchmark pricing. That's the best represented pricing. Averages and medians are okay, but the benchmark is the one that you really want to be paying attention to. So the Fraser Valley board here in March of 2022, and this is for all property classes. We can see at the height of the market, the benchmark price for a property was 1.2 million. Fast forward to today, and we can see that coming out at 1,091,000. See that the benchmark price points for all property types in the valley have dropped by 9%. I can also click on detached and give you guys a better idea. So you can see detached homes at the peak of the market in the valley were coming out just under 1.8 million. Fast forward to today and they're at almost $6 million. For apartments, you can see the peak here in March. They've come down as well, just not as much, and that's going to be the case with townhomes as well. Here's the peak of the market. Fast forward to today. Those have dropped quite a bit too, but not as much as the detached market has. So that's usually the way it works. The detached gets hit the hardest, followed by townhomes, and finally condos at the end. So you've heard me talk about months of inventory, and that's a way of measuring what type of market we're in, whether that be a buyer's market, balanced, or a seller's market. Sales to active ratio is another way to measure that. Anything that's between 12 and 20% is a balanced market. Anything above 20%, so 21% or higher, is a seller's market, and anything below 12% is considered a buyer's market. So Fraser Valley Board, Vancouver Board, and the Greater Vancouver Board are all in balanced markets right now, and the Chilliwack Board is actually in a buyer's market officially, which I found quite interesting because if you go back to December of last year, they were in a massive seller's market. And again, this draws back to everyone moving out that way to get more property. So we are seeing out in Abbotsford, Chilliwack, those price points have dropped more than the cities that are closer to the Vancouver core. So neighborhoods like Burnaby, Surrey, New West, they've dropped, yeah, but not as much as we're seeing way out in the valley. So if I click on detached here, that'll show us for detached only. For the detached, every single board right now is in a buyer's market. Greater Vancouver is slightly more into a balanced, 12% again is the indicating percentage. So they're the closest to a balanced market, but everything else is in a buyer's market right now for detached. Switching over to condos, we can see it's very different. We have more people trying to get in simply due to affordability. So you can see the sales to active ratio for these are a lot higher than the detached market, minus Chilliwack there, which is in a balanced market for condos. Everyone else is in a seller's market for a condo. Townhomes, higher percentages than a detached, and lower percentages than a condo. Fraser Valley's balanced, Vancouver's balanced, Greater Vancouver is balanced, slightly almost sellers, and then the Chilliwack board is in a balanced market for townhomes as well. Sales, and specifically the absorption rate in the Fraser Valley for the month of August this year, are down substantially from last year. We have been seeing people and sellers taking their homes off the market without them even selling. And I'm wondering if they're maybe just not interested in selling at all because they can't get the price that they thought they could get, or if they're taking their homes off with the plan of potentially relisting them in the fall when the market picks up. Because as we know, the summer months such as July and August are slower traditionally, and that's just because people are away and they're on vacations, they're getting revamped up for school starting in September, and the amount of buyers simply drops. I want to talk about how the rising interest rates have been affecting investors. The Bank of Canada is meeting again in September, and we are expecting rates to go up one more time. Just as we've seen over the past few months, whenever they meet to raise the interest rates, we feel it on the real estate sector. If you're an investor and you have a variable rate, your payments in some cases could go from a negative cash flow of $200 to a negative cash flow around $400 or $500, depending on your mortgage size. In Vancouver and the Fraser Valley, it is extremely hard to find positive cash flowing properties, and that's why I wanted to turn your attention to Alberta. I'm going to share my screen with you here. Edmonton is in the red and Calgary is in the blue. This is the total, so considering condos and detached here. Look at the sales volume for Calgary condos. Like, that's insane. They're up just under 50% in 1 year. Edmonton condo sales are down, also down in both Edmonton and Calgary for detached, but I was extremely surprised to see the amount of sales increase for Calgary condos. And I think that it is investors from BC and Toronto where the cash flow just doesn't make sense. They're at such a negative now that they're choosing places like Calgary to invest because you can still get a condo there that cash flows. Yes, you could be going for a long-term appreciation. That's definitely 100% the game, especially in BC. But if you're an investor looking for more of a positive cash flow, Alberta is definitely a spot to watch for. Don't quote me on this, but I think that appreciation, we're going to start seeing that rise in places like Alberta because just again, the high cost of living in BC and Toronto, families are just not going to be putting up with it for too much longer, I don't think. If you look at places like Calgary or Edmonton, I mean, to get a detached home, it's almost the same price as a condo here, and you reach that tipping point where it does become appealing for a family or an investor to look elsewhere. So if you're a buyer, you might be thinking, what should I do? What is best for me? Should I wait or should I go ahead with my plans, considering that there is so much that's unknown? There's a saying that I really like, and it's time in the market is better than timing the market. If you're trying to time the market, it's nearly impossible. And again, this goes back to your long-term goal with that property. Looking at history, real estate goes up, you guys, especially in BC. That's proven through and through. And so it's always good to accumulate your appreciation on that and put it into another property, build your portfolio up, or be able to upsize one day. Detached, there are definitely opportunities out there right now. For example, when I type in active listings in Langley, so that's I'll just show you guys. That's the code for Langley there. Under $1 million for a house, we see there are 11 properties available under $1 million. If you asked me that a couple months ago, hey Caileigh, can I get a house in Langley under $1 million? I would have said no. Definitely not. And now there's 11 on the market. Our house is more affordable in terms of a down payment today than they were a few months ago. Yes, absolutely. Price points have definitely fallen. But is housing more affordable on a month-to-month basis? Well, that depends on what kind of rate you're getting. Hope you guys have enjoyed this video. I hope you guys appreciated the information I provided you with. Let me know your thoughts in the comments below. I do have a link in there if you want to talk to me one-on-one about your real estate goals. As always, enjoy the rest of your summer, and I will see you guys soon.